There we go. Perfect. Once again, this is Brian Wilson. Thrilled that you can join us today. Henry Howard is also with us. End of October. Lots of good things to discuss in terms of what's happening in the market, and and in terms of what we're looking at as we kind of look at the path ahead. So we'll go ahead and jump into it. I'm going to start things off. I told Henry I would talk for 2 minutes and then give him about 35 minutes. So he wasn't too thrilled about those prospects. But
Warming up my vocal cords.
Right. And just a couple of ground rules, just as a reminder, most of you are familiar with this. All questions welcomed. If you could please just mute yourself during the discussion itself. Raise your hand if you do want to jump in and hit us up on the chat line. Henry will be kind of watching that while I talk, and then we'll kind of switch places. So with that, I think I minimized all my other screens, so we can go ahead and get started. I'll share my screen. There we go. And I thought I would start off today just by looking at a few of our big tech earnings plays. We did this exercise last week, if you remember, and there were a lot of question marks. That was really the takeaway that I had. I had more question marks than answers, and maybe that tells us something in terms of what we've been seeing here in the market during the last few days. Let's just go through kind of one by one. It doesn't take very long to do this exercise, but let's look at the setup for Microsoft and Meta going into earnings, and then kind of take a peek at Apple and Amazon. So if we look at Microsoft, we'll start with them. I would say there were positive expectations, going into their earnings print. We see demand rising. We see relatively low short volume. I would say market participants were expecting good things with Microsoft's release. They didn't get it, and I think that's part of the reason why we've seen additional downside. When they're Microsoft down about 5.5% right now, when there's built-in expectations and those expectations don't occur, that's when you sometimes will see a little bit more violence going the other direction. That was Microsoft. Let's look at Meta. We look at the setup for Meta going into earnings. It's fine. Neutral sentiment, low short volumes, but look at what happened to demand going into that neutral reading. So demand had weakened. So in other words, there wasn't as strong demand as we had in the latter part of September, first part of October. This was an okay reading, but certainly not as strong as we had previously. And we see the downside in Meta today. In terms of the setup for, I believe it's after the bell today, Apple and Amazon. When I was looking at Apple before the call, it seems to me to be a little bit similar to the Meta setup. So look at demand that was stronger earlier, but demand is now weakening. It's not terrible, but it's lower than it was. So I would say, and short volumes are also lower. I would say this is a little similar to the Meta setup when I take a look at it. And Henry, feel free to chime in if you see anything different. That's Apple, and then last one, looking at Amazon. In terms of positioning between those two companies, Amazon looks a little bit better to me. Why is that? Well, sentiment is actually rising. It rose from oversold conditions. We haven't yet, gone above 5, but to me, it's a little bit better setup than the Apple setup. And then, of course, kind of the last of the big tech will have NVIDIA in basically a lifetime, 3 weeks from now. I'll stop there for a second. Henry, any questions coming through so far?
And I don't know if you want to get to it now. We have a question about Goog and preferred shares of Google, and why they have different short volumes. Um, I think
Mm,
I think I know, but you know, Google, the preferred shares have an 18% short volume.
right, you can see that right
Goog,
here.
like is obviously higher supply. Um, do you want to delve into that, Brian? Or
I have, to be honest, I haven't thought about that before. If you have a theory or a thought, please go ahead.
well, I just think people tend to short. It happens in Berkshire also. People don't short the preferred shares. They're just more.
Right.
They don't trade them the same way. They don't get traded the same way that. So to your point, Benham, why and where, how you might take an advantage of that, that would be a question that I couldn't answer. But it's because preferred shares tend to not get shorted and traded.
Yeah.
And like I said, Berkshire would be one of those names where you can see the obvious difference also in the
Right, right.
preferred.
And to your point regarding the preferred shares, sometimes there's just a borrowing difference between the two. So this dramatic difference kind of tells me that the cost of borrowing for the preferred shares is probably about twice as much as the cost of borrowing just for the regular shares. And if the cost of borrowing is going to be higher, you're just not going to see as much borrowing of shares. That is, uh, what it boils down to at the end of the day. And what you want to do, no matter what the short volume levels are, it really applies to any name. Just watch the trend. So the preferred shares, the trend is moving lower over time, below trend. If we look at the regular shares, I would imagine it's probably the same, slightly different. So I mean that is interesting. There is a difference there, but it goes back to the cost of borrowing. That for whatever reason, the cost of borrowing for the preferred shares is just higher.
Right. And don't they likely um, don't get included in certain baskets of ETFs? The preferred shares
Correct.
don't get included in certain baskets the same way that the regular,
hmm And when that happens by inference, there's not going to be as much of a need to borrow shares, because sometimes borrowing of shares will be driven. Um, Short volume increases. Think of short volume as borrowed shares. So if there's heavy demand for shares, as we've seen with Google here, coming out of earnings, at times that will drive higher short volumes for a period of time, i.e., there's heavy demand. It's hard to find natural liquidity. Shares will be borrowed to facilitate that trading. Now, at some point, those shorts do need to get covered, but at times, if you see higher prices and higher short volumes, sometimes those will go in tandem with one another. There's a reason, why that is occurring. And I know that's a little bit complicated to understand sometimes, but at its very core, think of short volume as borrowed shares. So that's that for now. Let me go to a different topic. And both Henry and I have been hitting on it to one degree or another over the last week and a half or so. And okay, my Yahoo Finance was not working too well for me. Um, You've heard me talking about UVXY from time to time. This is a 1 month view. Henry might play it a little bit differently in terms of playing volatility in the market. This is the way that I tend to play it. You've seen me mention it in the market desk notes. It's a very volatile name. Take that back to a 6 month view. Generally speaking, as you're very well aware, there's just very limited volatility in the market. So if you're holding this, usually you're going to be losing money. This only pays out when you get volatility spikes. And as you can see from this chart, I forget what this one was, this beginning of August when the whole market kind of caved for about 3 or 4 days. You get volatility spikes for a period of time, and then you can see how rapidly those short out. And you can see this one even today in comparison to that spike, it's like absolutely nothing. But I've been playing this over the course of the last week. I've actually been in and out of the name, I think 4 times. Um, and why am I doing that? Well, part of the reason is just the overall context of the market. You've heard us talking about it. There's been so many moving pieces here, not only during the last week, but really over the next few days as well. I wanted some type of hedge in place to protect myself in case there was market volatility. Obviously, we've had that volatility, and you can see the result. I think I made money actually all 3 times here, going back to these spikes. The reason that I've been playing this volatility play, context of the market, um, yeah, that's the main play, and also just a market hedge. How am I playing it? Very, very carefully. It's a very volatile name, and as I mentioned, usually absolutely nothing is going to be happening in this name. So I play it very carefully. I dollar cost average into it, looking for potential volatility, and then I'm exiting, very rapidly because these volatility events just don't last very long. Henry, do you have any comments on how you play volatility in the market?
It usually goes down after it goes
Correct.
up
Correct. Correct.
pretty consistently over history after
Yeah.
it goes way up. It's just if you get caught in one of those events like we saw, I think it was the Japanese currency event. We
That would
saw
have been
that
that would have been this one, right? Yeah.
yeah, exactly. And, if you get
Yeah.
caught there if you're like, I'm going to short it at 40, you're going to, I hope you have liquidity. Um, that's danger always. Um,
Yeah.
and we have another question here.
Yeah.
I might jump in if that's, so that would be my only
Absolutely.
thought on picks
Go ahead.
it goes the other way also. Um, once things tend, historically everything calms down. If you just get caught, you kind of blow yourself up.
Mhm.
I'm looking at this question from Chris. Demand for Apple and Amazon, um, in that one is bottomed and one is top. Does that have any weighting? So we can pull up. Um, I'm going to share my screen if that's all right.
Yeah,
Or
absolutely. Uh-huh.
um, so I wanted to point out, I'm only pulling this up because I wanted to make the point. So if you looked at the bottom of the desk note this morning, and I'm gonna go forward to talk about big tech and earnings, and then maybe go back to my daily process if that's okay.
Mhm.
The one of the things I highlighted in the desk note is we have a saying at Edge: weak tops precede drops. I'll say it again: weak tops precede drops. So here's a perfect example. And it's displayed in Apple, it's displayed in Microsoft, and I think it was displayed in Meta. So I pulled this, I put this in the desk note. See this, if I measure it in our dashboard, we're at 7.2. Well, the next time it comes around, we're at 7. Next time it comes around, when we top at 6.1, when we have these weak tops, historically, you know, historically, that's when we see that more significant selling is after we fail
Mhm.
to make it back to the top again, sort of like the
Yep.
waves stop coming in. So, I'm going to point that, it's sort of one of these rare instances that, and I'm going to just show it again. It's like, it's this rare instance and it's hard to catch because you go, oh, we're here, we're almost to the top, but actually we're lower. And then here we were weak. And like I said in the desk notes, hindsight bias is always there. But if we look, not to beat keep beating the drum on big tech, I wanted to find the couple that have that similar look. Um, is if we go back to a 6 month on Amazon, look at how Amazon, it spins a few days at 10, but as it comes back up, it fails to get there. Let's look at Apple, and then we'll look at Meta. I know I don't mean to be beating the dead horse here, but look at Apple. Hits 10. Next time around, fails to hit 10. Next time around, really is huffing. So not, you know, this was the last thing I was gonna say about expectations. Is like, man, if this like sort of week 3 week tops in a row is any indication of what's going to happen with Apple, I don't have a ton of confidence in it right now. There we go again. Here's Meta, strong, and I can pull it out 6 months. So again, I'm just this sort of thing doesn't happen a ton in the data, where it's sort of this night. What it ends up being is more of like a 90-day average. But we hit the roof there. We spend fewer days, and then here we are, just sort of stuck at 5. So I think I'm just pointing out, like it's a little bit of a rare instance within Edge that I see this. I put it in the note this morning. I wish I would have seen it earlier, because I would have probably traded a little heavier. But that's okay. So anyways, that's the only thing as you were going through Apple and Google that I wanted to point out. And I'm happy to toss it back to you, or if you want to, I can walk through a little bit of the daily process for our users.
Let's see. I'll go with one more item, and then I'll toss it over to you, if that sounds all right.
Yeah.
The other topic I'll just discuss is the daily names. Even in this environment, still work. So if you have to be a little bit more careful in terms of position sizing. But if you look at, here's a couple of names from our momentum portfolio today. So Viking earlier, I can pull that up. So this is Viking, and earlier it was just down a little bit, but it was kind of bubbling up to the top a little bit. And what I'll do is I'll toss all these names just on a list, and I'll just kind of look at them every 20 minutes or so. I'm not watching every print. I'm doing other things, and then I'll just go back and take a peek. And what I noticed with Viking, it was just kind of bubbling up to the top. It was displaying strength in an otherwise weak day. And I'm like, okay, it's stronger today when it should be weaker. I'll buy that. So I bought it earlier, and I got out when it zoomed up, 2%. So just wanted to present that example that some of these names still work even when the market is weaker. Word of caution, that would not be my largest position size today. So just be cognizant of position size. Obviously, relative strength. I mentioned that concept. If the market is weaker, watch for those names that are bubbling to the top. The buyers. If they're out there buying, they can only keep the name down so long. And if a name is stronger in a weak market, that's a pretty good signal. As an example, well, today, I did not, buy AAL earlier. I bought Viking and I bought SoFi. Both of those are on my current holdings list. KGC is not. But if we look at those names, once again, watching for relative strength. AAL not as strong today. I haven't touched that one yet. But if you look at the setup for American, it's a pretty strong setup. Demand is good. It came down a little bit, but it's stable at 9. And price has just been moving higher. Short volume is pretty low. This is one that I might take a peek at here at the end of the day to maybe do an overnight trade and see if it'll bounce again. One other concept: look at the recent rise in share price. This is really not like an edge concept, but it's kind of like a basic structural concept with the market itself. Whenever there's rapid appreciation in price, at times stocks will then become overweight in passive models. So dare say, I think American's probably down today just because it's end of month. You had this rapid rise from 1278 all the way up to basically 14 in a short amount of time, that's going to put you in overweight status in some passive models. It's going to necessitate a little bit of selling. That's part of the reason that we always urge caution around the month-end time frame. You just don't know which companies or sectors might be overweight, and obviously it can work the other way as well. You can get some underweight activity, which then can prompt buying. So just wanted to mention that the daily names still work in a down market. You just have to be a little bit more careful with them. Watch your position sizing, and watch for relative strength in some of those names. And
That's
I'll
a great
toss
point.
it back.
Yeah, no,
Toss it back over to you.
I'm glad you went first. One of my, before I get started on my daily process, I just want to reiterate that those, that overweighting, we learn at a young age. I say at a young age, we learned that there's fundamentals that move stocks, and more so now. And what we'll look at here in a moment is that these stocks are moving because there's allocation strategies, and there's allocation requirements for funds, and there's allocation requirements. So I'm going to dig into that in our low volatility portfolio. But to your point, Brian, is when a stock gets overweighted, it's not because they think the company's bad. It's because they have strategic requirements to only hold a certain amount, whether that's a sector or an individual name. So I just want to emphasize what you just said, because we're so often thinking about, like, did they beat earnings? Are they a good company? And like, well, even if they are, like, if an ETF's holding too much, they have to offload. So again, I'm Henry. I'm going to go through right now. We have a handful of new users. I know I do this every week. I like doing it because I wake up every day and I follow this same process for looking through the data in Edge. This week we've been so emphasized on the context of the market, but the data has been really strong as well. Of what we've just been seeing, this really strong shift out of momentum and into these low volatility names, and we'll look at that a little bit more. So obviously here's our main dashboard. When you pull up Edge, I know we have some new users. This is broad market sentiment. Our nexus of sort of overbought and oversold. The red line means we got to start thinking about getting out of here. The green line meaning, this is a statistically probable place that the market rises from here. And so that's sort of, not to spoiler alert, that's what I'm waiting for, is getting closer to that green line. Looking back over last week, what we saw is we had obviously we had options expirations. We had this lower than on trend short volume. We had demand that, like I said earlier, is sort of just peaking. And I think last week we said it's really likely that we just bounce around. And so look at how we just, just sort of flailing around for a week, which is actually great. That movement is good environment for trading. If you're one of those people who's technical trading, this to me looked, it looks like an excellent, like, oh, it's going to break out. We're going to break out to new highs. But when we see this broad market sentiment start to decline, and even to a degree when we see this short volume peak, it's likely that we move lower. So that's the first read, is broad market sentiment. The second thing I'm going to look at, and I circled this in the desk note yesterday, is the number of components in our momentum portfolio. It's 5 in our low volatility. I'm impressed by 28 companies in low volatility, and so I've said it. So that's the second look, is looking at the number of components in low volatility and momentum. What's interesting, Brian, is this momentum number actually ticked up yesterday. I think it bottomed at 3. It was really bare, and so that starts to make me think that maybe we'll turn around sooner than I'm expecting. That those momentum names are coming in. So that's the second read. The broad market sentiment, momentum, and low volatility components. The third one, which is, I haven't been pulling a lot from big tech. There's such a consolidation of capital and market behavior, that's locked into these big names. So I tend to like, I kind of go Tesla up here. sorting by market cap. And I say, when they're moving together, that gives me a really strong sense of where the market's going to go up or down. When they're rising together over 5 and they're sort of in step, that's a good opportunity for longs. When they're sort of mixed up like this, it gives me less of a signal for trading. So this is the third step. Obviously, we looked at a number of those. So those are the 3 things. It's not until that then I say, so that I measure that against context. I go, so what's actually happening in the market? Because what I'm seeing right now, and I don't tend to jump into low volatility a whole lot, but when I see 28 companies, normally it's 12 or 15. So when we see 28 companies, we recognize something's happening in the market, that the market says we don't want to be holding these really high volatile names, and we want low volatile consistent names. So that was kind of my signal to open this up, and I'm going to dig a little deeper than I normally do on my process, because I mentioned it in the desk note this morning. Again, I'm going to sort by market cap here. Or actually, sorry, I'm going to sort by sector. So if you look at sector, it can give you an idea of what are the sectors, even on a down day, that are going to have strength. So we have a lot of financials, we have a lot of healthcare, and we've had a number of industrials. All right, you're with me, right, Brian? Financials, healthcare, and industrials. Well, if I hop over to a heat map from today, the place where we were seeing like not a lot of strength, Meta, Microsoft, Amazon, obviously those are done. But here we have healthcare. Here we have utilities. Doesn't look so bad. Even when we look over at financials, they're not getting beat up as bad. So, these are just little things within the data that we can learn, both behaviors and both within sectors, of how the markets, what the market's actually doing. So I'm kind of, that low volatility is an add-on, is checking that, but that's when I will go. I'll go to daily trading ideas and I'll say, so what are the names that have the highest probabilities? If I'm not looking to adopt a ton of risk, if I want to go to more of a low vol environment, I can go in here. I tend to sort top to bottom. And again, I have this list of 100% probabilities. Well, why is that 100%? It does not mean that it's guaranteed in the future. It's just saying over the last 90 days, under these similar demand and supply environments, 100% of the time it rises from its levels. So we have the exit, the entry low and the exit high, that gives you sort of these bands of volatility of when to enter and exit. And then, as I said before, I want something that's in a strong sector. So look, we have a couple financials, we have an industrials name in here, and we have one healthcare name that is looking at. So again, like Brian said, I kind of steered away from individual names for the last 2 days. But the point is that alignment of broad market sentiment, and then dialing down into a sector, and then going through each of these individual names to pick a name to trade. That, man, it's really, you find a lot of strength. It's very consistent, and the probabilities, it's how does it behave under these conditions, which if you could ask that question for how does Apple behave under these conditions, and go look historically, how does the price behave under this demand and supply? Same with Google and Tesla, and get really familiar with those names. So those are the couple things that I wanted to mention. Again, excuse me. I'm going to go back to this low volatility, and I'll take a breath. Let me just take a breath. We love your questions. It's really helpful for us. So if you have a question, if you're new, raise your hand or type a question in the chat. And it's always helpful to know what our users are thinking. So let me jump to, again, this low volatility. And I said it already, but I'm going to say it again, is a lot of these funds, they have a an allocation requirement. So they're actually not allowed to carry cash. They probably are required to carry a certain number of treasuries and bonds. But when they foresee that the market, that there's a shift out of momentum, when there's sort of, dark skies on the horizon, there becomes this move to low volatility because they can't allocate to cash. They can't allocate. They have to stay allocated, 100% allocated. And so, again, it's just the reason we talk about market structures, because it's really helpful to understand how the market works. Okay, I'm running out of things to say, Brian. I mentioned the weak tops on broad market sentiment, Microsoft, Meta, Apple. Again, I don't want to keep tooting the horn, but when I see these three lower tops, especially with what's coming with Apple, and we saw how the market responded to Microsoft and Meta, doesn't give me a lot of encouragement. So with that, I don't know if, let me give you one more chance to ask questions, and then Brian, maybe we shift to the context of the next couple of days and talk
Yeah.
about new month, new money, and what we should expect as everybody's sort of filling out their ballots and wondering if that's going to topple the market. We can talk about that.
We Yeah, no, absolutely. We do have a question from Benham. Before we get there, Henry, do you mind going back to broad market sentiment for a moment? You had
Yeah, yeah.
mentioned short volume moving lower, and that sometimes that can perhaps uh, not be an issue. But do you mind elaborating on that a little bit?
Yes. Let
So
me
we're
make
seeing a
sure.
turn. We're seeing a turn in short volume moving lower. Can you talk about what you're seeing with those lower short volumes right now?
Yeah, that um it's not until the market drops that the market either has to hold its gains or it has to drop for those shorts to get covered. And so I'm actually looking for, see how we have alignment here of a bottoming short and a rising demand. Um, my expectations is that the market if the market the market continues to sell off, this is actually an indication that we're going to have a little more selling, because then it gives those shorts an opportunity to cover. And I don't quite, I don't know exactly the uh, the mechanics behind it. I'm going to look at uh, uh, big tech as well. But the point is, there's a lack of commitment to both sides, right? So when we saw all this summer, we had 50% short volume, 50%, demand was at 5, short volume is at 50%. There was a clear commitment to a strategy throughout the summer, right? Um, what we see here is like within our big tech is like we're topping around 6 point when we're making this top, starts to be not even a commitment on the short side. So I'm going to actually wait until I see this sort of start to flatten out before I look to get long. Um, it's just when I see this, I say somebody's covering, but also I need that to get to a bottom along with demand before I start jumping in.
Let's see, we'll shift to a couple of questions for a moment. Entering positions, market open midday, wait for the last hour. Benham, it really depends on the situation that particular day. I did enter Viking about an hour and a half into the trading day today. The reason that I did that is because once again, it was bubbling to the top. It was showing relative strength on a weaker day. I might look at American Airlines at the end of the day today because I like its setup, but it's not showing any strength today. So I kind of let the names tell me what to do if I'm going to trade on any given day. Sometimes they'll get away from me, and if that's the case, then I don't chase them. I just wait for another day. So in terms of how that goes, it really just depends how the day is progressing. But there's so many names out there, there's no reason to chase them. And the daily trading ideas, give you those ranges, the most appropriate ranges to be in terms of, not chasing them higher. Hopefully that helps. Um, Candace, to your question, if we're not choosing specific names, are we trading in index on volatility or some other strategy? Uh, yes. I mean, that's exactly what I was doing with UVXY. Like I mentioned, I got in and out of the name 3 or 4 times here during the last week. I was trading individual names as well. When we get into this environment, and we had mentioned this in market desk notes, I'll go back and share my screen for a moment. When we get into an environment where we get above the red line, it just becomes much more difficult for the market to sustain gains. So we had mentioned this in market desk notes. You get above the red line. This time frame was a little bit shorter than normal. The normal time above the red line is about 9 to 10 trading days. That would be roughly what was happening here, roughly what was happening here. The market tends to post gains when you're above the red line, but it peters out. So the average over the last 5 years is 50 basis points. So in other words, you're above the red line. That average gains during that time is 50 basis points. But you can see it every single time here. Market gains peter out, market gains peter out, market gains, peter out. In that type of environment, it's really hard to go one way or the other, because you're gonna have days that are higher, you're gonna have days that are lower. So to be long the market during that time frame, um, you would have made money through here, but it was a choppy process, and it's just a difficult environment in which to make money. The market structure was telling us that by reaching that top. So I know my answer is a little bit long-winded here, but when we get in this type of market structure, I'll tend not to directionally trade per se, because it's very difficult to predict which way the market is going. I'll kind of stick to the individual names. And as I've previously mentioned, because of the context of the market, I've been putting on volatility trades. Hopefully, that helps to address that question.
That's great. Brian, we have another question about behaviors.
Yeah,
And just I think just a general question. It's in our FAQs, but
yeah,
about passive behavior. Can we have 4 primary behaviors. Do you want to dig
yeah.
into those a little bit? I know you usually say them so well. Um,
Sure, sure. No, thanks. On the active investment side, and let's go to the different behaviors so you can see them, and we'll just pull up our big tech portfolio. So 4 behaviors in the marketplace. Each one has a different reason why they're buying or selling. We have most of them represented. Active money. Active money cares about fundamentals. Think about some of the big pension funds. That would be a good example of active investors. They're buying because they understand the story, and they're acting on it. Passive money cares about characteristics. Think about large cap, mid cap, small cap. Think about growth or value. Think about sector. Think about volatility. There's different reasons why you might, as Google, for example, there's different reasons why Google might be included in a passive investment fund. And the way that you can think about passive investors, one, they care about characteristics. They're model based. Think about index funds, ETFs, quant funds. That's normally the 3 that I will toss into the passive investment bucket. Fast trading. Fast trading doesn't care about the story. They don't know the story. Stories are just a blip on a screen to them. They're just looking at it. For example, with Nvidia. They're going in and out of that name hundreds and thousands of times during the course of a day. They might be trading for 2 seconds at a time. They're looking for making markets, making money by making markets, and they're looking for direction. And a lot of times that'll be, very rapid direction, and then just repeating that trade over and over again. Ideally, they're looking to get flat by the end of the day. The last behavior that's not listed in this list here is the risk management side. Think about derivatives in the market. And that's precisely why we watch it so carefully during options expirations. But think about what market participants are doing either with their hedges or with their leverage. And that includes everything in the options market with calls and puts and all the futures contracts. So risk management, derivatives activity, specifically to your question on the passive investment side, that's model-based behavior, index funds, ETFs, quant fund trading.
So Brian, thanks for the explanation. The In those behaviors, when I say, for example, big tech, if I see a lot of passive behavior in big tech and we're
Mhm.
starting to rise,
Yeah,
that I go, that's a good time to get long, because I
yeah,
know though that passive money is going to uphold, it's going to outweigh the fast traders and the active traders. When
mhm.
I see a bottom where there's a lot of value buyers, and this one you have to be careful about, when you jump, if you don't want to jump in too soon. If I see a lot of active people, a lot of value, how do we pick stocks? If I see a lot of active people entering a stock in what's like a really value level, I know that they're thinking that those active people, and you mentioned pensions, are saying we like this price level. Similarly, when I watch, I get to it when we get to a top, and we really see, um, even on, say that the index gets really extended, and I see fast traders just go through the roof. My eyes light up for shorts. Though they're more dangerous because those fast traders, they're looking for liquidity to the upside, and if they can't find it, they'll keep pushing the index higher, because they have enough money to push the price higher, and they want to cash out at a higher level. Just putting a little bit of methodology to those behaviors. I guess I'll volley it to you and say, when you look, like for Viking Therapeutics, will you look at the behavior before you enter that trade? Or sometimes I'm like
Today I
not as
was not,
concerned.
literally
Yeah,
today I was just looking for relative strength. That was it today. Yeah.
yeah,
But
great.
I love the point that you made earlier about kind of combining the different sectors. Look at those different names and momentum or low volatility. Is it being dominated by a certain sector? And if you're looking at a name that's an outlier that day, maybe it's the one and only utility name and all of momentum. Momentum has 20 names that day. There's only one utility. Well, maybe I think twice about playing in that utility name. Maybe go where the strength is for that particular day. But I like what you mentioned there. Let's go to our kind of look ahead. We've keeping you a little bit longer today. Sorry about that, but this is important to kind of walk through it. There's conflicting signals today, and I'll just be honest with you. It's a little bit hard for me to give you a concrete signal in terms of what are we seeing right now. And I'll start with going behind the scenes for a second. This is our daily look for sentiment. So we saw just rapid decline on a day over day basis. That meant this is a 5 day average. So what you see on the sentiment score itself, that's a rolling 5 day average. But look at what's happening now as we get below five. This is slowing down. Now it's just a couple of days. You can't make too much out of a couple of days, but the market looks like it wants to bottom soon. And it might be bottoming, before that green line. Like I said, we don't know for sure. We let the market speak to us, but potential bottom happening fairly soon. Um, we look once again at short volume. We do see shorts getting covered. And if you look back at this over the last few months, this is a little bit of a different cycle than what we've seen before. Previously, when short volumes were low, we would complete a cycle where they would move back higher, they would move back higher. And this time it just did not do that. Um, in context of, I'll just put it in context of the election for a second. Um, I would say market participants, for whatever reason, I would expect it to be going the other way, to be honest with you. They're comfortable being long the market right now. No, I don't know if that changes. This is a little bit of an outlier, to me, with shorts getting covered ahead of an important event. I'll just, when I was looking at everything, even though this is weaker right now, to me, this paints a little bit of a bullish signal. It might not happen immediately. We could, continue to have weakness over the next, 2 to 3 days. But I don't know, Henry. I'm seeing a little bit of a bullish setup here. I might be crazy.
That's why I like you, Brian. I said in momentum, there's 5 names. We took from 3 names to 5 names in momentum. And I said it could go up faster than I expect. I'm still leaning on the context of Monday and the we say new month, new money. We've had 3 month option renewals on the first of the month where, there just weren't buyers for those monthly contracts. And so,
Yep.
so that's a little bit why I'm okay with making my money on the downside right now, because I'll bet I get by Tuesday morning, I'm expecting to be buying. I just don't want to jump into, but you're usually right on the turns. That's what I know. It's like,
Yeah.
if
Yeah.
you're turning bullish, I probably should be also. So I think you make a
Yeah.
great
I,
point.
I, you know, I'm turning a little bullish. I don't know if it happens. The turns can be choppy. Let's just put it that way. Any market turns, either at the tops or at the bottoms, can be choppy. That's what I would expect over the next few days. This just tells me right now that market participants are not too worried about the election. Now, they might be wrong, and we could get volatility. I will have a hedge in play going into Tuesday and Wednesday of next week. It'll be a small hedge. I will have that in play, but I will be, I think, more long than I will be short. So I think I'll leave it at that for now. We've taken you a little bit over time. Are there any last questions? And by the way, if we don't get to your questions here in the meeting chat, you have our emails, and we're happy to get together with you individually as well. Candace, I think you've got a question. Do you want to just tell us what your question is, or?
Experience with a micro E-mini S&P 500. Yeah, Candace. I think one of the biggest values of the E-minis, and Brian and I talk about this all the time. They're super liquid 24 hours a day. The downside is they're super liquid 24 hours a day. So when we see movement overnight, it's the European markets are opening. And so we see that's what we wake up to when your position's down in the mornings, because it's been trading in Europe for about 4 hours already. So yeah, that the big tech is, looking at big tech and the e-minis is a pretty good place to start. So, but we won't get much further down the road on that. But good question. Yeah, you're welcome, Chris. And Brian, last question. What are you dressing up as tonight? You got a pumpkin or anything
Oh,
you're carving?
I will not be dressing up tonight, actually. I'm not allowed to. I actually do a little bit of volunteer work at one of our local prisons, and they're having an
Oh,
having an event tonight. So I will be heading to prison. I think they'll let me out at the end of the night. That remains to be seen. If you don't see me next week, that check
what
check check
happened?
our local prison.
All right. Thanks,
Well,
Brian.
everyone
Have a
is
great day.
Yeah, thank you so much, everyone. Hope you have a wonderful rest of the week. As I mentioned, we're always available for your questions. We appreciate them. And with that, we'll say goodbye.
See you, Brian.
Catch you
Thanks,
later, Henry.
Candace. See ya.